Did you know that dividend-paying stocks outperformed the market by 2% annually the last decade? That's even during economic downturns. In times of uncertainty, stable investments can be a game changer. So join me today as we look into how to deal with volatility in the market to bring stability to your portfolio. Welcome back to Simply Money. In today's volatile market, stability matters more than ever. Whether you're a seasoned investor or just starting out, understanding the best stable investments in 2025 is critical to protecting and growing your wealth. There's a lot of uncertainty right now, always is with the change of presidency, wondering what taxes will look like. Right now, we're worrying about are tariffs going to improve or worsen things economically. There's just a lot of uncertainty, and that brings volatility to the market. The market is sensitive to uncertainty. The market is very volatile in uncertain times, and so you're going to see that. And so how can you stabilize your portfolio for this coming year and years ahead? Because this isn't going to be the last time we're going to see uncertainty. There's always things in the news and in speculation that creates uncertainty and increases the volatility of the market. Let's get started. Right now, the market and the economy is full of uncertainties. You have rising inflation. Is it coming down? Is it coming down fast enough? Is it going to stay down? Is it going to be escalated again from new programs and new taxes, trade war, all sorts of uncertainties happening, which is causing inflation to remain unstable and uncertain in people's eyes. You have the market volatility itself. Just 2 days ago, the market dropped 2.5%. Depending where your portfolio stands, that can be hundreds of thousands of dollars, or it can be tens of thousands of dollars. It doesn't matter. It's a 2.5% drop in one day. It hurts to see that, but we have to remain calm in these unstable times and knowing that this uncertainty will pass and the market will recover and will go up. I told someone the day it happened, I said, don't panic. Don't sell what you're looking at right now. It's just something happening. The Fed had just made an announcement. It created uncertainty and the market responded. Well, 2 days later, the market has responded back in the green and gone up about 1.5%. Hasn't regained everything, but that's how things go. We don't get as paranoid when we see it go up 1.5 points, but we do when we see it going down. And that's normal to have that fear, but we have to not allow that fear and that normal response to dictate our behavior. We have to be planning what our strategy is and stick to it with the buy and hold long term and make sure we understand, because if you know what you're invested in, you know it will ride through the unstable times. You have to take this individually because everybody's in a different position. You have a lot more time if you're 30 years old to ride uncertainty and volatility out. If you're 65 and trying to retire in 2 months, well, you should have already been making plans on how to minimize your risk and reduce that risk and stabilize your portfolio more by hedging it with different types of investments. So everyone has a different approach how they do it. You need to make that determination for you, but not allow that volatility to dictate what you do. And with so much conflicting advice out there, finding reliable options feels overwhelming. And stress is created by financial uncertainty in our own lives, let alone in the society we live in when we see national uncertainty. But when financial uncertainty is taking place in our personal lives, it becomes a huge proponent of inducing stress that we need to avoid. But don't worry, there are ways to safeguard your portfolio while you're still growing your money. It's not about just hedging and protecting your money. It's not about taking your money, putting it in a coffee can and burying it in your backyard. We're not stuffing mattresses with money, because that is actually losing money because inflation is eroding your buying power. So we want to hedge and safeguard your portfolio without losing the growth potential. And we're going to look at a couple things here today as we dive into this further. What are some stable investment options to consider for 2025? And I think these are stable options to consider during any time frame, even in not so uncertain times. A lot of people are opposed to them. I'm not a big fan of these, but bonds are a classic safe haven, especially government bonds which offer reliable returns with minimal risk. Now, you're not going to see the upside of the growth, but they're there and they're used to help hedge, to protect the downside of a market. It stabilizes on downturning markets. They're not going to see the big growth that you'll get with the stock market, with ETFs, with mutual funds. But they're made and designed for your portfolio to provide you stability and to minimize the fluctuation in your portfolio. Another great stabilizing investment is real estate. Property values tend to hold steady and even grow over time, providing both income and stability. Now, obviously, there's been times, 2008, the real estate market didn't hold so well. It dropped drastically, and it took many years to recover that loss in values. But there was a bubble. Right now, yes, real estate is skyrocketing, prices are skyrocketing, but there is also a shortage of housing, which is driving that cost up. Markets aren't up just because people are getting low-term loans. It is creating a supply and demand issue, and the supply is lower than the demand, thus the prices are going up. I'm not saying on any of this, let me precursor this isn't financial advice. I'm not telling you to go buy bonds. I'm not telling you to go buy real estate. I'm just educating, giving you options for you to do your own due diligence with anything financial. Even if you work with a professional financial advisor, you need to do your own homework. You need to do your own due diligence and make sure you understand these investments. Whatever you're invested in, you should understand them. The third stable option, this is my favorite and the one I use to stabilize my portfolio, is dividend stocks. I don't use individual stocks. I personally use ETFs or index funds, depending on which one is most beneficial for me. I typically use ETFs. And these are stocks or groups of stocks that not only grow, but also pay you regularly, creating a buffer in turbulent markets. And each of these options provides a unique way to add stability to your portfolio. The reason I like dividends is because those dividends are adding to your portfolio holdings. Let me give you an example. If you own a stock that pays a dividend and the value of that stock is down, when it pays that dividend and you reinvest it, you're buying more of those stocks because the price is lower. And if it pays the dividend when the stock's really high in value, you get the dividend, you buy more stocks, you're not buying as many. So it automatically helps you with your dollar cost averaging. You're buying more value in that same company. And like I said, I use ETFs, so I'm buying more shares of all of these companies. One of my favorites, my personal favorite, is SCHD, because not only does it grow in value, it shows a strong dividend growth. So the dividend is growing each and every quarter, year over year, and allows me to continue to build that snowball of dividend payments and my yield on cost. So down the road, when I begin to use that, I will have a much larger amount of dividend being paid to me, and my portfolio value has gone up at a nice pace. Is it growing as fast as something tech heavy that's all about the Amazons, the Google, the Apple? No, it doesn't have that hyper growth, but it also doesn't have the downside that those high tech, high volatility sectors have. And so in the down market of, say, 2022, did it perform great? No, but it buffered my portfolio against the others that were down 20, 22%. It was only down maybe 5 or 7%. When in 2024, when the market was up and the tech went crazy, and those stocks and ETFs and sectors were up 30%, or some even higher, SCHD and those dividend strong portfolios were only maybe up 10, 12%, 15%. Which is still great growth, but you didn't get that hyper growth that you get in some of these high growth stocks like Apple or Nvidia. But again, it buffers against the downside. You don't get quite the upside, but it's also paying a dividend and grows year over year. If you'd like to see a video, check this one out on how I break down a hypothetical investment in SCHD over the last 7 years and how that dividend snowball impact and it grows. And I show it quarter by quarter, reinvesting and what it grows to and showing the ups and downs and helping you ride unstable markets and volatility. And it's not just for SA, you can do that for any stock, any ETF, and see how the ebbs and flows, but how the long-term growth is there. It's a great opportunity for you to learn to put your emotions at ease. So those are the three stabilizing investments that I would consider to look in, do some homework, do some research to see which one will serve you and your portfolio best, depending on what your goals are and where you're at in your process of building your wealth. Again, to me, the standout investment for 2025 is dividend stocks. Again, I prefer ETFs. They offer consistent income regardless of market conditions. Historically, companies that pay dividends have shown resilience during downturns. And according to experts, dividend-focused ETFs like SCHD or VIG are positioned for strong performance in 2025, blending stability with growth potential. So there's something for you to look into and do your research on, like SCHD or VIG or other dividend-focused ETFs. With rising economic challenges, stable investments like bonds, real estate, and mostly, in my opinion, dividend stocks and ETFs are more important than ever. By choosing wisely, you can weather the storm while still achieving your financial goals. What's your go-to stable investment? Share it in the comments below. What are you going to use, or what have you used for your portfolio to stabilize the volatility? And with uncertainty in the air, we all need to know from each other things we can research. Leave it in the comments for the community, for them to share and look into for themselves. If you enjoy these videos, hit the like and subscribe button. I appreciate it. Share this with a friend or share it on your social network. I would appreciate that. It really helps promote the channel and get us out there for others to see and to learn. That's it for today. Thank you for joining me, and we'll see you next time on Simply Money.